The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off with about 24 minutes to go until the start of trading, and you have markets chopping around. We got the Bank of Japan. As they raise rates, we have yields in focus this morning, and we have an S&P right now up by 6 points, trading at 68.35. We had quite the two-way action yesterday. You see the roller coaster in terms of both up and down rallies. We finished the session with some selling coming into the close, and this morning we're slightly higher. We jump over to the NASDAQ, up by 60 points right now, up by 0.25%, 25,321. The Dow slightly in the red, off by 15 points at 48,305. And the Russell barely in the green by 0.1%, up 3 points at 25.32. We talk about yields. You jump over the 10-year right now. A little bit of lower price, higher yield. The 10-year approaching 4.15. The 10-year negative by 8 ticks at 112.16. We jump over the dollar. And how about that for some volatility? As you get a little bit of higher yield, you get a little bit of dollar strength, 98.75. We've backed off from that high, though, just in the last about 45 minutes or so. The dollar trading lower. We're at 98.55 right now in the dollar. And there's your dollar yen. There's some volatility about 10 o'clock, the volatility continues. And what do we got? We got yen weakness to 157. And on a technical basis, this is the area where we usually get a little toppy. Quite an acceleration from 140 up to now 160 from those April lows. And we jump over to the headline, and yeah. So you get a Bank of Japan hike. And this is options expiration as well. Bond yields rose almost everywhere after the Bank of Japan lifted its key rate to the highest level in more than 3 decades, signaling further hikes could be in the offing. Japan's 10-year, the highest level since 1999. How about that? And imagine, Japan had 0% yields, and now you hit 2% for the first time since 2006 in Japan. The tightening cycle will continue if the economy performs as expected. And you have rates higher in the U.S. and in Germany as well. The yen, though, leading losses among major currencies against a strong dollar as traders were left disappointed by the lack of clear guidance on when Bank of Japan officials might tighten policy again. So yet again, a story of buy the rumor, sell the news. All of it's priced in, and we're actually getting weakening. Right? You get weakening as in they wanted more. They wanted more certainty about the path forward in terms of hikes, and they don't get it. The yen weakens. We have the dollar strengthen a bit, but we're backing off right now, and that doesn't even have to do with the yen. Let's check out the euro-US dollar right now. Don't usually kick it off with currencies, but we got some action this morning. There you go, right? Check out the euro-US dollar. From 117 to 117.30 right now on that initial move that we're getting this morning on a 15-minute basis. All right, we jump around to some other equities. FedEx with their numbers last night. Decent numbers, an initial spike higher, but we're trading lower this morning. FedEx going to be down about $10 on the open. You jump over to UPS, a little bit lower on the FedEx news as well. UPS trading at 101 right now. We jump over to some other volatile equities. Oracle shares in the green by about $8. Trading higher. Micron following their earnings on Wednesday right now, higher by about $3 in the pre-market. We check out the big dogs, NVIDIA, up about $2. Microsoft shares in the green by a couple dollars as well. Google flat this morning, and Meta shares 6666. Ooh, look at that. 6666 right on the chart. 4 of them. What's that mean? I don't know. Can it be good? 6666 for Mr. Zuckerberg and Meta. Not sure I've ever pulled up an equity where it was trading at 6666 on the dot. That's where Meta was this morning. We jump over the VIX. So it's Friday trading, folks, and this is now we got options expiration, okay? We have metals right now a little bit lower from the highs we had overnight. Okay, you spiked to, 43.66. You were higher a little bit last night as well, 43.66. You got gold down by $7. Silver's been the leader. Silver up 65 pennies at 65.87. You jump over to platinum right now, up another 18 bucks at 19.78. We check in on copper. Copper spikes to 5.56 overnight. Look at this copper, man. This copper. Quite the volatility plunge with tariffs in late July, and it's been an upward trend since then. We got 1 day of selling, October 10th, a couple days in between there in late October, early November, but other than that, upward pressure. Now, we do have some selling on December 12th. That's something to watch. Quite the selling. You've drifted higher, but we're going to have some volume today. We already got almost 30,000 contracts, and it's not even 9:15 in the morning. You did 32,000 all day yesterday. Some big numbers. All right, so when you look at Oracle, the cloud business is suffering, but they're going to get into the TikTok business, is the acceleration this morning. So quite the pullback from their earnings a season ago, but this morning you're trading higher by $8 as, the cloud provider joins investor group to run TikTok's U.S. business. Now, they were already using their servers, the U.S. TikTok. This is how they kind of got their in here originally. The deal prevents a shutdown of the app in the U.S., in a memo to employees yesterday, this is TikTok, said the social media company's U.S. division will be run by a joint venture that includes Oracle, Silver Lake, and Abu Dhabi. Seems like Abu Dhabi should have some questions along with China in terms of running the algorithms that process the youth of America. Oracle will be tasked with auditing and validating that TikTok follows agreed upon national securities terms. Mr. Ellison is the man we're going to trust for the job. Nonetheless, so Oracle, they're going to be trading higher on some TikTok news. And there's your acceleration on that number last night. Jump around to some retail. So Walmart was suffering yesterday. And we're basically flat this morning. Anytime those growth stocks just plow higher, I mean, Walmart's a safety stock now, and rightfully so. And yesterday they traded lower. You see the give back, right? Look at intraday on Walmart. Whew. Quite the give back in the afternoon session from 116.60 almost to 114.60 for Walmart. But boy, on a weekly basis, check out this stock, man. A lot of strength, okay? A lot of volume to the upside. You have their earnings on volume November 17th, right? You're breaking above this area that we originally had on February 10th. You didn't have much volume up there. You had some selling on their earnings in February and then sustained volume to the upside. Now, it didn't quite take out the earnings volume, but these last 2 weeks, December 1st and December 8th in Walmart, outside of that earnings week, the two highest volume weekly bars since August. A lot of strength in Walmart. Markets in the green. We're coming right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps up by 13 points right now, trading at 68.44. NASDAQ 100 up by 105. You have Oracle higher on the TikTok deal. You got everybody higher in terms of the main players. NVIDIA shares. Pretty remarkable, right? 25 billion shares outstanding. Seems like just a little bit of a chop. Meanwhile, from Wednesday's low to today's action, $6. You're talking about 150 billion in market cap. Quite a number, man. But yeah, you check out Oracle. We're trading at 187 right now. And let's take a look at the weekly. And we got some selling, man. Okay, that earnings event. Now, what I will say is you're back to the beginning of the year. Okay, we had some buying coming in January. You're finally testing this bar. If I told you, man, we were going to come back and test this bar, you test the breakout from earnings in June, well below where we were in September. You rip lower on their numbers last week, and we're trading lower on what looks to be lighter volume. Today's going to be a big day. But you're coming into 246 last week. You're at 162. So you need about 80 million on a daily basis. You know, today's going to be a big day with TikTok news, but even on an earnings day, you did about 100 million. You need 80 million to trade lower on volume. So you're probably going to trade a little bit lower on lighter volume here. And now you would just like to see a sign of strength. And maybe we're going to get that sign of strength right now because... let's see, we're going to open at 187, actually. So this bar might actually turn green. Make a low on lighter volume, and you catch a little bit of a bounce. Oracle shares at 187.50 right now. All right, we talk a little bit of Fed. So we're going to get a new Fed chair in the next few weeks nominated. They'll be in that position after 3 meetings that Chairman Powell has coming up in 2026. But New York President John Williams, no urgency to further adjust interest rates, and recent employment and inflation data did little to change his outlook. Seems like, at least for now, and things change, But at least for now, he's advocating for a pause. I don't personally have a sense of urgency to need to act further on monetary policy right now because I think the cuts we've made have positioned us really well. I want to see inflation come down to 2% without doing undue harm to the labor market. It's a balancing act. And as we talked about yesterday, that inflation data yesterday, 2.6 to 2.7%, okay, whether you look at the headline to the core. And like we talked about on the program yesterday, folks, okay, do some digging into owner's equivalent rent because it seems like they didn't get enough data. The government was shut down until almost the middle of November. And in cities where they didn't get the data that they needed, they just carried a 0% inflation rate on many of those cities for owner's equivalent rent when that may not accurately represent the inflation for owner's equivalent rent. It would bring down the services and it would bring down and it would bias that number down, and you might get a pop on that number in April or May. So the Fed's going to wait. They're going to wait until we can potentially benchmark those numbers. They're not going to put as much credence into thinking 2.6, and even if they do, the number is still 2.6, which is a remarkable inflation number. You compound a 2.5 to 3% inflation number, and it grows much faster than even a 2% number, let alone the numbers we've been dealing with in recent years. But, you know, the battle was always going to be the last mile, inflation, and we are here, and as many expected early on, okay, it's going to be very difficult to get inflation, especially when many of the policies of the president, in the short term at least, okay, are inflationary. You're talking about tariffs. You're talking about immigration crackdown on employers on the lower wage spectrum. So we'll see. All right, we got 6 days until Christmas, folks. I encourage you to come on over and check out the TFNN Holiday Tiger Dollar Sale. Now, we only run this sale once or twice a year, folks. That's it. We run it during the holidays. Occasionally, we'll run a July 4th sale. We did not run a July 4th sale this last year. The one sale of the year. So check it out. Okay, you can get a 20, 30, or 40% bonus on your purchase. You spend $500, you get 600 Tiger Dollars. That's 100 Tiger Dollar bonus. You spend $1,000, you get 1,300 Tiger Dollars, 300 Tiger Dollars in your account. You spend $1,500, you get 2,100 Tiger Dollars. That's 600 Tiger Dollar bonus. They can be used for any newsletter, any service. If you're signed up for any newsletter right now, folks, it's as simple as you come on over, you get your Tiger Dollars, they'll be applied to your account automatically, and you have nothing else to do. If you're thinking about signing up, whether it's Larry Live Trading, okay, the Gold Report, the opening call, Basil just did an outstanding webinar on Tuesday. You can check that out on the front page. You sign up for the opening call, you gain access to that webinar immediately. You got some time during the holidays. Okay, you want to check out some of these awesome webinars that we have available under the services tab, folks. Tim Ward's got a couple great webinars. We have my dad's Time of the Trade archived webinar that's available. We have Basil Chapman, okay, a live trading webinar archive that's available as well. Teddy Kegstat's got a couple great ones out there. Check that out on the front page of TFNN. That Tiger Dollar sale running through next Monday as it runs. Christmas in 6 days, folks, 6 days. We jump over to yields. Now, check this out, all right? We've bumped up against this level, and this level is about 4%. On a volume basis, we had a lot of volume on the acceleration up, folks, okay? And then we had light volume on the pullback. I keep watching this one. That acceleration, November 20th, November 21st, the 24th, and the 25th, okay, that was coming into Thanksgiving, and then the Monday and the Tuesday preceding it. That was the Wednesday that you peaked out, and then we came back on the Friday following that. Maybe the Monday even, with the bond market. But there was your volume. Okay, you had quality volume to the upside. We pull back on lighter volume, and check it out. When's, you know, you do under 2 million contracts on the 10-year, all the way from November 26th, when you had all the selling, to December 9th, and then you get a little bit of a spike, and that's when you get some buying. And we got some buying again on 3 days ago, on Monday. On Monday? Yeah, it is. Tuesday, the 16th. So we have volume to the upside. And higher price would mean lower yield. You jump over the dollar. You've caught a little bit of a bid. Well off the lows this week of 97 and change. The dollar right now on a short-term basis, we back off from the highs of 98.75. So yeah, the Bank of Japan, they hike, but they don't hike fast enough. But yields, 2% now. Okay, if you're borrowing yen, you're paying 2% now for that carry trade. Quite a different story. Gold down by $6 right now. Silver, it's continuing strength. Silver right near $66. Silver up by 75 pennies at 65.97. We get the Dow rolling over to negative price. A little bit of selling coming into the opening bell. Yeah, S&Ps as well. We just gave up 10 points in the S&Ps. All right, folks, stay tuned. We're coming back for the opening bell on Friday trading. S&Ps negative by 4. Dow off by 12.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. We have the S&P right now, positive by 18. We had some selling coming into the opening bell. Check this out. On a 1-minute basis, how's that for a little selling? 5 minutes before, and from there, we take off to the upside. S&P's now up by 22 points. NASDAQ 100, we're up by 131. That's 0.5%. The Dow gets back into positive territory right now. up by 155 points or 0.3%. The Russell up by 0.3% as well at 25.37. Check back in on the dollar. 98.53 right now. And let's check in on the leaders as you got the growth stocks higher yet again. NVIDIA shares up 1.5% right now. Amazon's flat this morning. You jump over to Microsoft, up by 0.4% right now. Google shares flat this morning as well. Oracle up 5.6% on their TikTok involvement. UNH out in the press this morning talking about releasing the first results from an independent audit of its business practices, adopting 23 ongoing action plans to track and implement recommended improvements, all of which will be completed by March of next year. I mean, imagine they're running all these and basically scams, folks. Okay, this insurance company, I talked about it incessantly in the past. We'll have to do another whole show or segment on it as well and bring up the articles for those that might not have caught those programs. In terms of just sending people into homes to diagnose patients that are on Medicare with conditions they probably don't even have, that result in overbilling to the tune of tens of billions of dollars. And I don't get how somebody's not going to jail for that yet, and how it's just that they're going to implement a 23-point action plan that'll be done in the next 14 months. Take a longer-term look at this equity. Listen, that doesn't mean it's going to zero, because unfortunately that's how things operate, especially in the insurance industry. All this talk about Obamacare subsidies and all this stuff going on right now, and you know, the 20 million people that come the next year are going to be the ones that are suffering the brunt of the problems with our government not figuring out some semblance of a reasonable way to either get off Obamacare and put something else in, or make it work for the 20 million people that are just going to have no reasonable way to afford health care. But yeah, this stock cut in half. You got Buffett in here, though, is part of the deal going on insurance. But yeah, just don't understand how it functions. When you talk about that level of grift, this is a $300 billion company, and you're talking about tens of billions of dollars, folks. Just go Google it. You don't have to look hard. I'll do another show on it maybe next week. The review found no deficiencies or need for corrective measures. Imagine that. No deficiencies or need for corrective measures, but recommended ways to enhance Optum Rx's practices, strengthening the escalation process for resolving non-payment and dispute cases through communication with manufacturers. He examined the business processes and not the legal and regulatory issues the company is facing with its primary benefit manager, pharmacy benefit manager. That's their pharmacy benefit manager, Optum Rx. No deficiencies whatsoever. If you've read those articles, you know what an absolute joke it is that they find no deficiencies in where they're doing business. Just a massive scam on the American taxpayer. All right. We got buyers in this market, folks. We got triple witching. So you got options expiration for the weeklies, okay, the monthlies, and the quarterlies. It's the end of the year. And we got markets, S&P up by 32, NASDAQ 100 right now. We're right back up to the highs of yesterday. How about that? 25,452, right where we were on the opening bell yesterday in this market. Dow up by 219. Yeah, and it's the big dogs doing it. That's what you want. NVIDIA up by 2.4% right now. Microsoft selling, though. Look at the divergence here. Amazon's got some selling, so Microsoft selling, Amazon selling, Meta shares selling. Ooh, they're all going into NVIDIA. What's going on? We jump over to Google. They're flat right now. You jump over to Oracle shares up by 5.6 and NVIDIA, all the buying. Chip stocks. Micron up by 5.2%. Broadcom catches a bit on the open as well, up by 2.1%. Jump over to the ride sharing. So Uber's been under pressure, to put it lightly. This thing's breaking out of the channel line. Something to watch here. You don't save yourself soon. What you're going to watch here, if you're looking to get short, even Uber, or you're looking to get in it, right? Ideally, you break back within the channel. If you're looking for a bullish, you come back, you test that channel line. That would be the buy. If you're looking for a short in Uber, you'd really want to, because you're trading lower with volume right now, okay? And longer term, it's a great equity. But you're breaking out of this channel line. Technically, you better be paying attention, man. We got some selling. Okay, you got some selling in volume. Right now, this week, we've already done 106 million. You did 120 last week. You're probably going to break lower with volume. So ideally, you break in, you come back, you test it, you trade higher and lighter volume. That would be your short. You're breaking out of that channel line for Uber. Jump over to DoorDash. Yeah, that's a dicey scenario. That's volume to the downside, folks, on DoorDash. You trade lower with volume. You're bouncing on lighter volume right now, and you're going to do it again. Look at this bounce. You bounce on 33 million, 25 million, and we're at 17. And you'll do some volume today, but bouncing on lighter volume on DoorDash. All right, check this one out from Bloomberg. Data center outages. Yeah, this is going to be as the world just operates on data centers. Aurora, Illinois, a 10-hour outage. Cyrus One data center. KKR and their partners. A series of missteps by facilities workers and outdated systems at that center, which led to a major disruption for the CME. Yeah. 99.999% of the time is what they want. But guess what? 10 hours? That's a lot of hours to be down. Trillions of dollars of trading volume each day. Yeah, an eternity. How can it be down 10? No backstop whatsoever, right? BlackRock announced their acquisition in 2021. $15 billion. They secured billions more in financing for those data centers. KKR, $8 billion loan to the data center operator. They're all intermingled, right? 55 operational data centers is their portfolio. Quite a business, man. But they're going to have to prove that they're resilient. Data centers are a key focus of KKR's infrastructure business. One of the fastest growing. But yeah, you start having events where you're down for 10 hours. All right, folks, we got equities trading higher on Friday trading. Remember, this is the last full week of the year. We're coming back, and we got Christmas week. S&P up by 30.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And yeah, remember, we got options expiration, triple witching, and always interesting when you come in the end of December. We got Friday action. You have some yen action going on. The gold contract can always have some interesting Fridays, especially when you have some currency action. And we got the Bank of Japan, as we got a weekend, but that's not stopping right now. That gold contract, as you catch a little bit of a bid on 9:30. And we're right where we were at about 8 p.m. last night. Pretty tight trading range on gold overnight. Right now, we're back in the green, up by $4 on gold. Silver, look at that, making a run for the high. Silver up by another 2.3% right now. Platinum pushing $2,000, up by $30. And as I mentioned, copper catching a run as well. Copper at $5.55. Yeah, I was talking about Aurora, Illinois. And, you know, I thought of that, Darth. So Wayne's World, right? Aurora, Illinois. And you know what's amazing, man? It made me think about it. So it's amazing how time flies, of course, folks. 1992, okay? 33 years ago, almost 34 years ago, right? For my birthday, I went with like 5 or 6 friends, okay, and we saw Wayne's World. Now, I look it up always to remember what year it was, and Wayne's World was released on Valentine's Day, 1992. My birthday is March 20th, and so my birthday was like a month later, right? So Wayne's World was probably still a huge movie 4 weeks after release in the theaters, so we go check that out. We're a bunch of young boys, right? Everyone's joking, laughing. We think it's hilarious, and we're driving home, and we're all in the car, and we pull up to a red light, and we pull down the window, and we get the attention of 2 nice old women next to us. They're driving a car, and we proceed to ask them if they have any Grey Poupon, and they have no idea what we're talking about, and we are dying laughing, as all adolescent boys just can't control the laughter. Great memory. Pretty remarkable, man. 30, what did I just say? Yeah, I was 12 years old. Fortunately, I'm 45. 1992. So, yeah, 33, 34 years ago. But I remember it well, man. Pardon me. Do you happen to have any Grey Poupon? If you don't understand that joke, I envy you, because that means you're probably a little bit younger, as that was a magnificent ad campaign from the people of Grey Poupon Mustard for the longest time, and it played out in Wayne's World as well. Gotta love it. It's amazing how certain memories stick. Right? Remember, isn't it amazing how certain memories stick, right? Pretty close. Yeah. Imagine that, right? I have that vivid memory, and I don't remember much else of that. And it sticks very hard, and just one of those great moments of dying laughing with your friends, you know. And it was my birthday, going to see Wayne's World. Aurora, Illinois. You got it. Mike Myers, man, he is a genius. Austin Powers, all that stuff, just the movies he created, is a genius. All right, let's jump around some of the gold medals, okay? We jump around. I'm just going to cherry pick some of the gold medals, the miners out here. And, yeah, we're trading higher. Agnico Eagle, off of the highs of 187. but we're trading right now at 172 on a volume basis. We got some selling last week, a little bit overextended from the channel line you had been in. Now, you can make the case here, okay? Where are you lining up on this? You could make the case you're breaking out of this channel, right? You come out, you break out of it, you come back and you test it, you get some buying on their earnings in October. We'll see if we can hold that. But realistically, I think that we're a little bit overextended on some of these equities as we've risen from 41 to 180 from last year, 77 to 177, just a bit extended right now, even with gold where we are pushing record highs. Look at this market right now. They're buying this market, folks. Look at this. We're over the highs of yesterday. Okay, you get the NASDAQ about 800 points away from the highs. You get the S&Ps, again, only 1% away from those highs almost. We're trading at 68.74, all-time highs, about 80 points above where we're at right now. The Dow, 600 points away from highs, and you got the Russell about 60 points. First Majestic, the silver stocks. Now we do own this one in the gold report right now. Up by 4%. Silver catching a bid. You got highs out here. 7. That's a daily. Okay, you trade higher. You get above those highs on lighter volume. Give it up on a weekly basis. First Majestic. Silver stocks look strong. Look at that volume. We make the high and you do it with greater volume. Now you're trading into these highs here. Okay, October and November had a lot of volume. So keep those spikes up as you get above these price levels, and you do it on a little bit lighter volume. Even that move there, you do 111 million on a weekly for AEG, and that was last week essentially. But you're trading into 142 and 123, and you get above it on 110. Yeah, new gold up by 4.7%. Is that an all-time high or a recent high? Yeah, not an all-time high. Always remarkable. Look at this equity. Okay, look at all this volume, though. On a monthly basis, look at the volume coming into these equities, man. Right? Whew. They fell in love with the gold equities again, folks, and the volume says it. Now, you talk about extraordinary runs, man. Okay? We got to take that tick off there to really show. From $14 in 2011, $13 in 2012. Before you know it, you're at $4. Now, from September of 2012 to December of 2013. Okay? September of 12 to the end of 13. September of 2012, okay, when gold was pushing 1,800, to the end of 2013, gold's trading at 1,200. So gold pulls back $600. Okay, that's a 33% pullback in the metal. That would be right now with gold trading at $4,400. What are you talking about? Third of that. $1,500. You'd pull back to almost $3,000. The point being, if you ever get a pullback like that, okay, gold pulls back 33%, and you have equities like AG go from 24 to 9. Okay, so everything's magnified, and we've had an extraordinary run for 2 years, and I'm just prepared for some type of pullback. We're not out of our equities. We have 3 positions that are active in the gold report, folks. One of the things that I keep talking about, though, is that keep your stops in place in this market. Okay, we are going to get a pullback at some point. I think the pressure is on the dollar to go lower. So longer term basis, I like the commodity market. It's catching a bid right now. There's going to be pressure on yields. Fed's in focus. But we're going to have plenty of trading opportunities. Okay, we have Chairman Powell for 3 meetings. We have a new Fed chair for 5 meetings. The market's going to have to figure out what the new Fed chair really wants. Right? Where is this path going? There's a lot of grandiose verbiage, right, of cut. But there is going to be volatility, and that's going to impact the metals market. And at some point, we're going to get a healthy pullback. And I think we'll probably see higher prices overall in 2026. with volatility that we really have not seen in 2 years. Okay, you haven't seen any volatility, and gold's up 120% over a period of 20 months. All right, folks, stay tuned. We're coming back. We'll take a look at Oracle, JK. We'll take a look at Oracle. Higher today on TikTok.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We take a look at Oracle in the press and in the headlines for many reasons recently. You get that historic run on their earnings in September. Remarkable. You're talking about that's 4 or 5 months ago, and this thing just blew it away. $300 billion deal with OpenAI. The market says, wait a second, maybe that's not going to come to fruition as quickly as we thought. You pull back. This morning, we're trading higher on the fact that they're going to be involved in TikTok. Excuse me, not surprising there as well. You trade higher in the pre-market. We just got back above those pre-market highs. You're up by 7% today. Now, what's remarkable is you put this thing on a monthly, it's been a stratospheric run. Okay? You go from $58 to $345 over the period of a few years. On a monthly basis, that was a day like we've never seen on any equity. The amount of money that he made that one day. What do you make? Like $90 billion or something, Ellison, that day when Oracle came out with their earnings. We've given it back. You've traded lower on lighter volume compared to September. But boy, these 3 months of pullbacks, they're bigger than anything else we've seen besides September. So in the short term, okay, and JK's asking, he has a profit in it, and it's a swing trade. Should I get out? I took some heat. You know, on a longer term basis, and I'm talking about years, okay, a 5-year horizon, if you want access with the type of risk that comes with Oracle, because you better believe it's risky, all right, then I like this price action right here. But on a shorter term perspective right now, you know, the fact that Oracle rips lower from 345 to 192 and you got a market pushing all-time highs across the board, there is a substantial risk that just in the market right now, you know, you have an equity that's been cut in half as this market has held up extremely well. So on a swing trade basis, yeah, maybe you just draw a line in the sand. And I think that line in the sand is just like anything else. Pick a stop and stick with it. And maybe that stops as low as 175 because I really like where this thing stopped in terms of you got buying out here from January, okay, and you back it up further than that. You're talking about where we were in June as well. Folks, stay tuned. Basil Chapman's up next. Don't forget about Tiger Dollars on the front page at TFNN.com. Have a great day, everybody. Have a great Friday.